Yeah. So, closed a little higher today than expected. I would have preferred to close around 45.60, although I don't think it matters. A lot of the 45, 80, 85, 75 calls expire and today and close out. We are still in the bullish range. There's still support at 45.50 into the end of the week. Obviously, earnings tonight are going to play a really big role in determining the early part of tomorrow's price direction. But most of the straddling for tomorrow is set up here to the downside. So gamma's kind of like that for tomorrow. And this is at like 45.40. So expect maybe some push to try to get it near that range into the FOMC meeting. Although I'll have more data on that when I do my write up tonight, and we'll see, what's going on with gamma max and gamma neutral. Ideally, we would like to see both of these move up to indicate, a continued increase in bearish positioning, right? Because those are going like this alongside the price action. If we start to see gamma max contract and gamma neutral stagnate or fall off, that's bullish. So far, we haven't really seen a lot of that. And but the options data, if you just looked at that today, would have indicated that the market was going to stagnate or go down. Um, Meanwhile, the expectation was up due to where the positioning lay. Um, but we kind of have blown off the top of the options positioning. We filled the gap on futures. So now there's kind of a big empty space to the upside as far as long call positioning goes. There's still a lot of short calls to the upside, and obviously an earnings beat and a pump could start squeezing some of those positions at like 45.80, 90, and 4600 out, as they tend to be a bit more skittish. VIX now at 1389. Obviously, VIX increasing is very bad for their positioning. So, and it will increase as we move closer and closer to the FOMC meeting tomorrow. Right now, I think this is the cheapest straddle going into an FOMC meeting that I've seen. Usually, VIX is much higher for these kind of events, but that's because there's a high degree of certainty. So it's not really pushing the VIX up very hard. That JPOW is going to do 0.25 tomorrow, which is largely priced in. As a matter of fact, I would say, well, the 3 and 6 month are pricing in almost 2 rate hikes, although the 2 year not so much. Dixie down on the day, Bitcoin up, gold up, silver moving, wheat gapped up and closed again, oil's up 100 bps. Oil is now, I believe, inflationary across the board, or so additive to headline inflation now. Well, okay, WTI isn't. Brent is. WTI needs to be above 80, but Brent is already above 80. Yeah, Brent's at 83. So, additive. Additive to headline inflation. The Fed's going to have to take that into consideration. I don't know how they intend to manage that, but I mean, it's got to be a known factor for them that that's going to increase headline inflation, especially if it persists over like the next 3 months. And any month over month increase of headline inflation above 0.3% per month. So, last month we got 0.2% increase. If it was 0.3, that changes the year over year decline and starts turning up. So like 0.3, 0.4, 0.5, right? And that ends the disinflationary period. So something to consider. But we'll see. We'll see what JPOW does tomorrow. I think increase in quantitative tightening should be a consideration, given that the Fed has only managed to pull back about $1.3 trillion of their SOMA balance. Um, and with the bank backstops, it's more like 700 million. The Treasury general account is still not full, and at some point, the Fed is going to have to step in and become a purchaser of U.S. securities, and if they do, that's effectively quantitatively easing. So they may need to ramp up the rate of tightening more significantly going into the second half of this year. Hopefully, the lagging effects of monetary policy over the last 12 months will start to catch up, but they haven't yet, right? Largely because the effects of them are being resisted in every way possible, not because they aren't present in the economic data. I guess that's about it. I did want to take a look before we wrap up here at broad commodities into the end of the day. They're continuing to move up. We are right at the breakout point we started talking about a few weeks ago. Well, maybe about a month ago. So yeah, those have reached their breakout test, and we are moving into, I would say, a commodities cycle with the index above 110, maybe to confirm it, just for safety. But yeah, it's definitely moving up in a pretty significant way. Lastly, we are starting to see a little bit of maybe a turnaround here on this double bottom. If we start to see if a higher low here forms in the implied correlation index or core 3 month versus the SPX, this may indicate a bit of a loosening in volatility, right? Maybe ahead of VIX actually moving. So we'll keep watching that, and then yeah, I think that's about it for today. So I'll see you all bright and early tomorrow. Make sure you have the notifications turned on for Pickles Picks. I'll have the write up for SPX in there tonight. Congratulations on everybody who played the intraday NVIDIA play. That one worked out really well. And yep, I'll see you guys tomorrow. Have a good night.